are failing is because this is a very intense uptrend, and this is a complex wave 4. So even from a Elliott wave perspective, we are expecting one more high in the euro dollar. You do not say that wonks are failing simply because they are in correction mode. If this was a downtrend, not an uptrend, and this was a triangle in a downtrend, then wonks were failing, just like shorts are failing in this uptrend. You do not say that wonks are failing. This was a 400 pip rally in 2 days. It is just absolutely retarded to consider wonks to be failing. It is not so. It is a mistake to consider wonks failing, and anybody that considers wonks to be failing is probably going to get ran over. It's probably going to get ran over. The only safe entry is this wonk over here. Now, as I said, we're going into Fridays, so I would be expecting tomorrow into Friday for us to be breaking to the top side. One thing I want to mention is we have posted an entry to go short at the 1.348 level. Now, if this level is reached on Friday, we are probably not going to be taking this short. We don't like shorting the euro dollar on Fridays. It is simple as that. Now, this trend line has served as somewhat of a resistance for a while. Potentially, we could have a Kim wonk that is going to align with an awkward extension wonk over here. We'll see. We could potentially be retesting the bottom of the range. However, as long as the euro dollar is above the 1.324s, it is safer to be on the wrong side. Top picking is the easiest way to lose money, so you have to remember that trend is your friend and you should play with the trend, not against the trend. Any questions on the euro dollar? There really is not much more to say because this is a ranging market, and when you have a ranging market, if you don't want to lose your money, or you are, or of course, unless you are a range trader, which we are not, we are trend traders. If you're a trend trader like us, in a ranging market, you have only one safe entry, which is the wonk entry of the next swing wonk. So, any questions about what I said on the euro dollar? Any questions, guys? Okay, I'm going to move to the euro now because there are no questions. If somebody wants to ask me something later, please feel free to do so. Euro let me just check. Is this the one? Nope. Okay, this is the one. I have a ninja add-on, but that doesn't matter on this extension long. Now, as we said, we identified this bullish bat that aligned with all the way halfway back long. Now, for those of you that remember, we went wonk here with 119 targets. This was a triangle, and we booked everything at 119s. That's irrelevant, of course. We had a inverted head and shoulders here as well. Now, after this whole rally, after this huge ass rally, as you can see, which extended all the way to 120s, we held all the way halfway back wonk. Now, this halfway back wonk never filled its target. Actually, that is a bit peculiar because, as you can see, what traded from the BOJ meeting the other day that led to the sell-off was this halfway back wonk. So perhaps you can make a case that we could potentially be starting a range, but I don't think so. And the reason I don't think so is because we have broken countermeasure move shorts drawn from here. We broke the 61.8 line of these shorts, and we are still within a larger wonk, so it is unlikely that we are in a range like we are in the euro dollar. Furthermore, we have an inverted head and shoulders bottom which is a reversal pattern generally, which is already hit its minimum target, but you would expect new high now. And we have this bullish bat, which we identified. We identified this bullish bat when the euro dollar was at 118.2, I believe. You can check on the site when we posted it. We believe that euro yen should now be headed to new highs. The perfect target of this halfway back long that we traded is the 122.4s. Now, if we are in this long, this is where targets are, 121.67. We are going to be relatively cautious. The moment that we make a new high, I think that the best approach the moment you make a new high is to trail stops more aggressively than usual. We are currently making on what is left 250 pips for those that can see. I would expect this new high to come today. By the way, we broke also this trend line, descending trend line, so certainly cannot make any bearish bias. This looks like it wants to go all the way to 122s, all the way to 122s. On the most aggressive time frame, we are starting a series of extensions. Now, yesterday, we traded a halfway back long that went to target. Now, the moment that this halfway back went to target, it started blowing higher and aggressively higher. So what you do is you have this as a valid entry to go long now. This is your extension long. Now, this extension long has traded several times. One time, one trade to target. Here, retraded second time with a new high to target, and has now started blowing through targets. What we have holding now on the euro dollar is an even more aggressive extension. Oh shit. Sorry, Matthew wants me to call him. Give me a second, sorry. My partner is telling me to stop cursing. Sorry, it's part of my character. Anyways, what we are holding now, we are starting to hold even more aggressive extensions with an anchor from the 118.9s. They just went to first target. Looks like we're going to start blowing even higher. Now, guys, I know a lot of you have questions when it comes to extensions, when it comes to all those things. We are going to explain those very thoroughly in the future. We are probably going the first week after which the trial period is over. So that would be the first weekend. Sorry. So I'm just pulling my calendar. So that would be on the 9th of February, I think. That would be on the 9th of February, the moment that the trial is over. Oh no, actually not the 9th. That would be the 3rd or the 4th of February. We are over the weekend, the 2nd and the 3rd of February. We are going to do webinars over the weekend where we thoroughly explain this Fibonacci strategy. So do not worry, this is going to be covered. The reason why we want to do it outside of market hours is that I'm sure all of you are trading your own money. You are not just like attending here or paying us because you are a market geek. I know all of you want to make money, and to be quite frank, in real market conditions, people tend to stress, and I don't believe the strategies are learned best while market is open. You need to have you need to outline how the strategy works while markets are closed, not while they're open. So we're going to do this over the weekend. We're going to explain very thoroughly everything. So you guys can gather. We're also going to be posting a lot of educational materials. Ouch! The euro yen, guys, the yen. Oh my God. Okay, my day is so much better now. This is starting to become ridiculous. Anyways, what I was saying is. We are also going to add a lot of material about Gartley patterns. What I would like to encourage everybody to do now, when this webinar is over. Now, go to the website, znsglobal.com, log in, log in with your account. Wait, what's going on? Yeah, log in with your account. Go to reports. Go to education and read Introduction to Harmonic Trading. I prepared this especially for you guys to realize how Elliott waves in this and Gartley patterns, more specifically in this case, obviously Gartley patterns, align within this Fibonacci strategy of ours. Gartleys are a very powerful tool. Actually, when I say very powerful, I mean extremely powerful tool. The way I trade, and I've actually had this discussion with a couple of of our subscribers. Unfortunately, none of them are here. The way I trade is I like to call my system of trading Fibonacci cluster. I look for clusters of Fibonacci that align with Gartley's Elliott waves and the halfway back system all together. This is how I got this level to buy the Euro Yen here. Now, most people that trade a halfway back system would not have taken this entry because this is a second test of a long entry. You do not take within the system second tests. However, within my own system, I take second tests. So you know what I mean. Now, I'm going to cover real quickly the dollar yen. Any questions on the euro yen, feel free to ask them. In the meanwhile, dollar yen. Dollar yen now. Notice the euro dollar remains pretty strong despite this huge sleeping risk. The dollar yen. How the hell did we know to buy the dollar yen over here? Now, we outlined these triangles that you see. Why do we have them highlighted? Because each correction in the past has occurred in exactly this manner. We had a new high. I'm going to remove the triangles so they're better visible. We had a new high, a run to highs, a correction, pretty deep correction, you know, halfway back long usually, of the move to highs, a run to highs, which failed just prior to high, and then a bull flag taking us sharply down. Each of these corrections ended with this bull flag breaking and having an inverted head and shoulders. Bull flag breaking here, inverted head and shoulders here. Bull flag breaking, inverted head and shoulders here. And what we have just now is absolutely not different. We had a bull flag. The only difference is that this move, because of BOJ meeting, was a bit more aggressive. It was a bit harder to identify this flag. But still, the principle remains the same. We had a bull flag and an inverted head and shoulders bottom. We went long on this inverted head and shoulders pattern identification. This long is now netting over 100 pips. So this long is now making 100 pips now. Just to check the euro dollar because it's slipping sharply. Not a good look on the euro dollar. I have no idea what happened fundamentally. I don't know if Merkel said something about exchange rate manipulation, I think. Now, we could very well be retesting these longs to the downside, as I said earlier. I don't expect them breaking. We are going to remain bullish on the euro while it is above the 1.324 mark. This long is free, so I have no regrets if I get stopped out. I don't see it as a problem if I get stopped on this long. Oh, USD unemployment claims. Okay, fair enough. Well, I'm guessing that Yeah, the Dow yen should be loving the unemployment claims number, because if it is a good number, that means less easing by the Fed, which means the BOJ easing should be stronger than the Fed easing, and that ultimately means higher Dow yen, and higher Dow yen ultimately means higher Euro yen. I want to say this. We have said it a couple of times. The reason why we chose Euro yen over the euro dollar as our primary trade, as our trade of the week, and so on, is very simple. Euro dollar is not as clear as the euro yen. The euro yen is going to benefit even if the euro dollar is going to the downside, as long as the dollar yen is strengthening. So that is our reasoning for preferring the euro yen over the euro dollar. Now, the same principle outlined in the euro yen applies here as well to the dollar yen. We traded all the way halfway back long. We started blowing two targets. It went to target, and it started blowing two targets. Now we had this extension long. We draw the extension from this halfway back long that's traded before. This is the valid extension. It went to target once and never retraded. We are now within an even more aggressive extensions, which are conferred upon observation, because you cannot confirm this on anything else. This is the first time it trades, it goes to target, and it starts a series of new extension. So the dollar yen is now within a series of extension longs. It has the potential now to retrade this extension. We'll see. It has the potential to also pull all the way halfway back long as a valid long entry, because we have broken opposing measured move shorts. Dollar yen, euro yen are extremely bullish, extremely bullish. There is nothing bearish about these two pairs at this current juncture. I would expect new highs to be made today or in early Asia trading. So at least that's what I would expect. I just want to check real fast what's going on the Aussie dollar. Aussie dollar seems to be retracing its regional long setup. It actually looks like has it broken it? Yeah, it has actually broken its long setup. Now this could potentially have huge implications. The huge implications are regarding the Euro Aussie, because if the Euro Aussie confirms further upside, as it looks like it will, this could potentially confirm further upside in the Euro dollar. Now, what the Aussie dollar just broke, it was this long that it held. Now, the Aussie dollar is certainly becoming very tricky. It could hold this support level. This support level has not traded before, but it could very well hold it. Now, this support level needs to be confirmed. This support level needs to be confirmed. We haven't confirmed this support level. The way you confirm a support level is when you break all the way halfway back short. So the Aussie dollar needs to rally above the 105.54s in order to confirm this support level. At this point, taking a long entry here is pretty risky, even if it certainly looks good. Personally, I wouldn't take this long. There are different people with different risk preferences that could take it. I prefer to take trades with extremely small amounts of stop loss and extremely high probability. So this is not my type of a trade. And just going back to what I was saying about the euro dollar, not as weak as its counterparts. It is trading a micro measured move long. Let's see if it can continue going higher. I do not like this because we are going into the US session, and we are seeing some selling pressure in the euro dollar. If we repeat what we have been doing for the past 2 weeks, we would expect before the US session opens, and on US session open, to see the euro dollar retrade this long. The euro dollar is becoming risky. And the longer I'm sorry, the longer this congestion continues, the higher the chances that it's going to fail to the wrong side. So I don't know. The euro dollar is becoming very tricky. Uh, we remain long while it is above the 1.324 mark, but it is a bit scary. It is a bit dodgy. Certainly not the best trade out there. The best trades are in the yen, and anybody who took them should be making what they call free money right now, because the BOJ is making sure that everybody is rich. Um, any questions about what I have just said? I'm going to have a short smoke. I'm expecting questions. If there are no questions, I'm going to move to the Euro franc and to whoa, Euro franc, nice one. Everybody should check our freaking evening briefing yesterday, where we outlined the long level on the yen, on the Euro franc. Unfortunately, Alexander was just saying that we are retarded for not taking the Euro franc. I, I, I actually. I actually saw it, but because I have too much euro exposure in terms of euro yen and euro franc, I decided not to take it. But it was a very good trade. Um, any questions, guys? I'm giving you 2 minutes to come up with questions, please. Anything you are interested, from trade execution to whatever you want. Seriously. How long have you been smoking? I don't know, 7 years, 8 years. I quit for 3 months, but then I started again. Okay, apparently everything is crystal clear. Nobody has a single question. I guess that's what happens when we're making money. Okay, the Euro franc. Uh, we outlined this anchor yesterday in the evening briefing. Now, this anchor is not a valid support level. What we were looking for, anybody who has been following, was the 1.229. This was the one I was going to take straight away. Instead, we are holding this anchor, which is the start of the rally. I can certainly make a case of why this can be a valid anchor. You can make a sense that this is the anchor of this wave 3 halfway back long and so on. So certainly can be valid. We need to validate it, however. Validation will come upon breaking this halfway back short. So above the 1.247s, we have confirmed longs, and we know that we can hop onto extensions to catch a rally to the upside. A rally to the upside. Now, this bullish wedge, what we said yesterday, for those who haven't read the evening briefing, was upon breaking this bullish wedge, we have a valid straightaway long entry with a stop loss just under the 1.326 mark. Just under the 1.326 mark. If I say we nailed it, I think that is an understatement. Uh, you should have gotten free at the 1.238 mark for plus 20 pips, because your stop loss should have been around 20 pips. Now, if you are in this wonk, let it trade. That is my opinion personally. This bullish wedge could be a complex wave 4. I can certainly make a triangle case: A, B, C, D, E. Uh, this should be. So this certainly looks like a completed triangle. This certainly looks like a confirmation of further upside, and we should know fairly soon. We should know fairly soon if we are right. But the bullish case is certainly preferred. What could happen, and this is the only point of concern in me, is to have a B wave over here and then a C wave like that. So that is the only bearish scenario I can make sense of. But wonks are valid until they fail. We actually traded a halfway back wonk, if I'm not mistaken. Yes, we traded a halfway back wonk in the morning, front run of 4 pips. This halfway back wonk has now traded 2 targets, and we could retrade it. We could retrade this halfway back wonk. Now I'm going to check the dollar franc. Actually, very interesting. Not many people today in the webinar. That's surprising me a bit. But I noticed most of our subscribers are offline. I think most stayed up for this BOJ action, this funny end movement. So I'm guessing they're sleeping. Yeah, maybe they're busy counting the pips, man. That's certainly a good. That is certainly a very good advertisement for us now. Again, on a daily time frame, complex fourth wave on the complex correction after a five wave rally on the dollar franc. It is trading its next one level. He has targets over 1,000 pips above us. I have no idea how that's going to happen. I have no idea when it is going to happen. I'm just fairly certain it will happen. Now, on the micro time frame, and that is what we should be concerned with, because we are not funds that have the leisure of holding a position for years. We have an inverted head and shoulders, which has a few targets above us. Now, this could be considered to have retraded the neckline of this inverted head and shoulders. It is close enough, certainly close enough. I actually was looking for something else. Targets are, by the way, the one the 0.95s. I was expecting for a halfway back one to have traded. It aligns perfectly with the neckline. It hasn't traded. We will see. Perhaps if the euro continues to remain strong, this halfway back wonk could trade. I am not going wonk here, that's for certain. I don't like the level, but the bullish bias remains on the daily time frame. On the 50-minute time frame, the bias is bullish. I just want to get the best entry possible at the 0.295s, and unless I get it, I'm not gonna be entering in this trade. Now, I've been saying this for a while. Trading is a game of patience. You shouldn't be trading unless you get the price that you want. There is no point in chasing moves. You either get the price that you want or you don't. It's simple as that. It is not about how often you trade, it is about the quality of the trades. The better the quality, the more profitable you'll be. You can, for example, this assuming, say, we have this trade in the euro yen that's doing extremely well, as all of you know, because I've been making sure to spam it quite a bit. I just want to make sure. Now, where did that go? Okay, we have this trade in the euro yen that has a gross profit of 520 pips. Even if you're trading a minimal micro watt account, if you're trading, say, if you took this trade with 100k instead of, say, 8 watts or whatever, you would now have booked over $700. No, actually, you would have booked like $520, and you would be running $500 profit at the moment. This could be, you know, like if you do one trade like that every 2 months, and your account is $5,000, you're making 10%, you know. And that is not little by any standard. It is, in the end of the day, about the quality of the trades, not about how often you trade. As a matter of fact, the more that you trade, the more often you expose yourself to the market. The more often you expose yourself to the market, the higher risk you take. Now, I love scalping. Uh, I love scalping. I love trading in general, so I do trade a lot. But my favorite trades are trades like this. Those are the trades I can really rely on, you know. Those are the trades that really can increase my balance. Those are the trades that really make the difference in the end of the month. Scalping, you know, scalping is fun. Scalping is good, you know, for paying that bottle of Moët Chandon in the club and so on, but that's about it. Uh, anything else? Anything about me? Anything you want to ask me before I give you Alexander? We don't. I don't have futures on my platform, and unfortunately, I haven't installed Thinkorswim on. I haven't installed Thinkorswim on this platform, but purely judging from. Do you have Nikkei, Alex, on your platform? I would actually prefer for Alex to cover this because he's much more technical within the system, and I'm probably gonna end up with some awkward Gartley pattern or something like that, which I know that you guys would be interested in, but I really need to take some diligence when I cover stuff that I haven't looked at for ages. Judging from the yen, I would say it's extremely bullish. Alex checking if he has Nikkei. To je Japan BBP. No, he doesn't have Nikkei. Okay, give me a second. I'm going to add it to my subscription list. We haven't looked at it by now, so honestly, we should really do it as a report. Now, I'm going to just quickly take a look at it for you, Zoltan, because you asked, but I would assume it is extremely bullish. I mean, there is no way it is not extremely bullish with the yen doing what it is doing, you know? It's just plain impossible. This is the CFD contract, uh, and this looks like some sort of a bullish Gartley. Um, not very perfect, however, this is too deep of a correction. Certainly holding some sort of support level. Towards here, we could be holding. Actually, honestly, mate, I have no idea what we're holding. This is the only thing that makes sense on a daily chart to be holding a halfway back long with targets at the 1122, 1122s. Confirmation breaks upon breaking all the way halfway back short. We are going to make a report for you, Zoltan. We are going to look at it and we are going to make a report for you. So make sure you check the site. Confirmation will come on a break above that. Keep in mind that this is a range. The only thing that you have to know here, in my opinion, is that this could be potentially a bullish range. Well, feel free to subscribe. But we will make the report even if you don't so. Now, I'm going to give you Alexander. I'm going to mute myself. He's going to continue with sharing his screen. Alexander, please call Matthew. I'm going to stop sharing my screen now with him.
Okay, guys, can you hear me now? I think everything is all right. Okay, let's get a look at this market. What you're seeing on your screens is a chart, 15-minute chart of the cable of the pound. What is currently happening, and I wanted to start with it because right now it's getting offered massively. What you know and what we've been telling you for the past 2 weeks, the first resistance point we saw in the pound was this level over here. We hopped on the trend somewhere at the 161 point, if I'm not mistaken. Um, so let's zoom in and have a look what's going on right now. Um, What we're currently holding and what went to target is an extension drop from the 1.5954s to lows. Basically, it was this anchor has been in play for a second time now. This was the first time it held. We gave you this position. It was a very good sell position. As you can see, it went to target perfectly. What you do in our system is you drag and you go same anchor, new low. We retested resistance a couple of times until yesterday and today in the morning. As you can see, right now the pound is getting offered massively. What you can also see is this big support level that we've been talking about. This is basically a full halfway back from lows to highs. And right now this comes at 1.578, approximately 1.579. The pound right now is so weak that it cannot come for a retracement, and we were hoping that maybe we can draw same anchor again, new low. But at this point, what we would do, and if you want to hop in on the trend, actually right now I think it's missed, you would take the same anchor of the low of the extension and you draw to this low. Let me just zoom in so you can guys see it properly. Okay, you take this low over here. As you can see, we'll hold it perfectly to the 50. No front run. If you guys were, I'm sorry, George was talking at that time, couldn't cover it properly. As you can see, it's still getting offered massively. The pound. The break of the whole bullish halfway back is at the 156635. Below that, there's just air under us, and once we break this line, we hope that we're gonna get a full halfway back short, and maybe we're gonna be able to trade this offering in the pound. It's really strange. Looks like that what George was explaining about the Aussie dollar and also um, early, actually late last year. I don't know if you remember, safe haven flows were going to the UK and to Australia. Right now, the picture looks very different. Very different. Euro is the effective backstop of the euro, the OMT program. Looks like it has some weight on the market. And pound is getting offered massively. Seriously, it's for the pound to be holding such an aggressive extension. It's really strange because it's a more traditional pair. It always goes as per retracement. You would normally trade it on a traditional or on a same anchor new low or high depending on the trend. Okay, do you guys have any questions regarding the pound? We will be looking to get into this trend somewhere, somehow. We'll keep you posted. George, are there any questions in the chat regarding the pound? Okay, no. I'm seeing euro dollar just starting to rip. Yeah, what George also wanted me to say is that the fact that the UK is going out of the EU is not bullish for them. It's massively bearish. They're a country that has a lot of excess debt. They need Europe. What normally used to happen is that the Americans would bail out the English. They will also always stand behind them, but this is not the case right now. America has their own problems. UK has also a lot of problems. They've been doing a lot of QE, as you know. Asset purchases in the UK have been on a large scale, and the BOV have not done anything to change that. So basically, the asset purchases they were doing late last year, this is the result we're getting over here right now. Okay, I just want to bring up a chart of the Euro USD very quickly. I know that George covered it thoroughly, but I just wanted to mention something which is very important regarding our strategy. We're gonna cover this. Early today in the morning, when I woke up and when I was writing the morning briefing, what I basically saw was that for the first time in this range, let me zoom out, in this range over here, this massive range, we held halfway back. This was early morning on the market open, if I'm not mistaken, or late last night. Yeah, it was late last night. We held this basically this traditional retracement. As you can see, we broke it almost by 1 pip. In this range, we can make a count. Also, what will happen after that is, let me just get rid of this. From here, we can draw another traditional, which just went to target. As you can see, right now we're shooting up in extensions. This is what the EURUSD normally does. For me, this was a sign first that I heard George say that our 88 wave triangle was complete. He does all that analysis because I'm a bit of a fail with 88 waves, so I rely on him. And when I saw that, basically when I heard that he said the triangle was complete, and when I saw this happening, I was expecting the euro to shoot up seriously. Okay, euro yen, big hit for us. We should congratulate ourselves. I don't want to get into that. Do you guys have any questions regarding what I just said, or should we just continue throughout the market to show you things that I was looking at early morning or last night? Let me just have a look if anybody has any questions. Okay, Craig is typing something. Let me just have a look. Okay, George is gonna answer that. George, please. No. What do you mean no? Craig is answering a question, bro. Okay, he's gonna type that into the chat. Right now I'm not in the USD JPY, so I have no relation to it. Let's I don't know. Let's maybe have a look at your GBP. We talked about it yesterday in the webinar. Zen, I don't know if he's in here. We talked about the. Okay, Zen is sleeping. But we were talking about with him about this thing. It's crazy right now. We said it's silly bullish yesterday. Unfortunately, we couldn't get in. I think our tech guy in the office, Simeon, he's in this move right now. Okay, so what you're seeing on your screens is a 15-minute chart of the Euro GBP. After we have this traditional, actually it's not a traditional, I think it's, yeah, it's an extension. After we have this extension drawn from the 82.8225, approximately 26, we had a continuation of it. So it traded first time it traded, it was here. You can see that it held perfectly. Let me just zoom in a bit for you guys so you can have a look. It traded perfectly to the 50%. Stop loss was a bit big over here, but you could have traded it maybe with 6-7 pip stop. Very bullish, very bullish. What we would normally do, and we talked about this in previous webinars, you would look for the strength and the weakness in the market. Obviously, right now, Euro's getting bid up, and it's in aggressive extensions. Pound was an aggressive halfway back short. So pound is getting offered. as we said, that's for quite some time now. So you would look to buy into the strength and sell into weakness. Obviously, this pair is the Euro GBP. You would go long. Here was the first entry you had. Actually, sorry guys, it's not the first. That's the second probably. Yeah, here is the first one. Goes to target. As you can see, you drag, same anchor, new high. Again, you have an entry. Goes basically to target again, and after that you had one more entry, which is this one over here. As you can see, we've been trading perfectly to target now. It's it's silly, seriously. This is it's silly. You could have got stopped out from this move a couple of times. Very aggressive sell-offs, but that's what normally happens when large players offload positions. What we should mention is that the Euro GBP is right now at a crucial resistance point. Let me just see if we can see it on a 4-hour graph. This is what the 4-hour graph looks like. Let's get rid of this. And are you seeing this good? Yeah, you're seeing it good on your screens. So if we draw high low, let's be a bit more exact about this. You can see we're dipping right now into the 50%. For me, if we break this level, if we go above the 0.576, basically above 0.86, this would signal a major change in having safe flows in Europe. We'll be keeping a close eye on this, as this could change basically the financial landscape for quite some time. If we don't, well, you can see the target is well below us at 0.74443, approximately 0.75. Right now, we don't see this happening, but what do we know? We just trade on levels and confirmation and support. So yeah, do you guys have any questions regarding this? This is really interesting. It's really this is something that has to be properly looked at. Any question, guys? Nothing? Okay, I hope you guys are getting this. George just said that Euro is basically looking vertical to the upside. In the Euro, we have mentioned this a lot of times. We're expecting upside a bit, maybe to until 138. Was it? Yeah, 1.346 for now. In the very bullish scenario, maybe the 138s. But we'll see. Okay, let's bring up a chart of gold for all those guys that like gold. I'm one of them. I like the crazy moves you get in gold. What you're seeing on your screen is a 4-hour graph of gold. What we're trading right now on a macro time frame, basically on a large scale, is a retest of the 16. Let me just do like this so you can properly see. Is a retest of the 1694, approximately 1695. It's a result of a broken trend which we had from. Let me just draw it. Which we had from here. As you can see, we've broken trend. Just a sec, sorry guys. Yeah, we've broken trend. We didn't complete targets. The first time we touched, we did not complete targets of the 1607 of this move. So right now, when we broke trend, we got a retest of this level. We talked about it multiple times that gold is gonna either move away sharply from this level or is gonna go for a full halfway back at the 1711. Probably. Right now doesn't look it. Let's go maybe and view it on a 15-minute time frame. Okay, you can see this is your big resistance level, the 1695. Below us, the only support that we can expect to have um, for now, if you ask me personally, is a full halfway back from the break of trend to 1697, which was the high in gold, which comes out about a 1661.50. This is not a limit order buy. I would not limit order it for anything in the world because we've broken the larger support below us. We have also not been able even to dip into the 50 below 1695 above over here. As you can see, multiple times retested and multiple times rejected. Let's zoom in a bit. What we had on gold from yesterday, and basically started signaling us that it's going to go down, was the first traditional measured move, which traded perfectly at the 1689.46 approximately. Entry was the 1689 clear. Went to target. At this point, what you would do in our system is you would just draw from the 50% to the new low, where the target is. This is the entry that I posted today in the morning briefing. I hope some of you guys got it, although I've been hearing in the chat that people can't find where the morning briefing is. I'll be talking about that a bit later. As you can see, we went to target. We even blew through targets. Right now, it's a bit confusing with the big levels, not with the big levels, but with the small moves in gold. What you would normally do is draw an extension to lows. But as you can see, let me just get rid of the previous move. As you can see, we've broken the 61.8% line, which is a bit troubling. Right now, this signals that the move maybe is not legit. If we move away from this resistance level in gold, this would be a dirty extension. That's what we call it. Basically, it's gonna take out everyone who didn't place their stops a bit higher. But having in mind we broke this level, we can just continue with a traditional maybe. Right now, it's trading to the front run of $1. Maybe, I don't know. Doesn't look good. I wouldn't get in here because we've been tired a bit. What I know in gold that if we don't see a sharp rally come out of nowhere, we don't have a level. But you never know with instruments like gold. You have big players over there. Somebody might like the level and just wipe all the shorts that have been participating from the 1695. You never know. This thing, Thursday, Friday, it's gonna go down seriously. That's what the moment, like in gold, what happens is you have Monday, Tuesday, and Wednesday a buildup of a trend, and then you have Thursday, Friday the play out. Normally, perfect days for going long gold is Thursday, Friday. Shorts, I don't know. Normally the trend plays out on Thursday, Friday. So yeah, this is pretty much what's happening on gold. Perfect entry in the morning. Let me just show it to you one more time. Perfect entry. This one over here. You would be on this entry. You would be riskless. You would be deep in the money now. Also, it's the second traditional trading from a very big resistance level. It's a level that you would be comfortable playing. and the stop loss is ridiculously small. It's $1.50. Um, it's pretty much nothing. And we're gonna look for an entry into the trend. I'm really pissed that I couldn't get in myself in the morning because I was typing up the morning briefing. Um, and that's about it for gold. You guys have any questions or anything you would like to ask me? Uh, what we're seeing on our screens, the Aussie yen feeling the weakness of the Aussie dollar, even with the massive easing. Um, over there, it's not a very cool game for us. Multiple retest levels, broken trends. After that, they play out, so we stay away from there. Um, I don't know what else to show you guys. George talked about the euro yen, amazing pair. Euro GBP right now, maybe in for a pullback. We'll see, depending if the pound breaks the small extension that I showed you guys. Probably it will. It's not proper for the pound to trade in such a small extension. Here comes maybe the bid in the pound. They're gonna try and bid it up a bit. They're not gonna leave it like that for sure. Um, any question, guys? Come on. I'm sure you have some questions regarding the strategy, regarding our jargon, the way we talk about the markets. Not typical talk about markets. We don't. We trade in trend lines and also other things, but the problem is they're always associated with Elliott wave. Classical technical analysis. We use that, but we don't emphasize. We don't trade off it directly. Please ask away any questions you might have, because I'm pretty much out of info. We could have a look at S&P, which is a total wreck right now. It's artificially being bought up. Multiple break of trends, terrible price action, enormous gaps, which for the gap players is a dream come true. At this point, as you can see, what we have as solid support for now is the the 1481 actually was. This move played out. What we had yesterday, if I'm not mistaken, or was it 2 days ago? I don't know when I was covering this. Yes, was this support level, which obviously did not give us anything. As you can see, it held once. After that, it couldn't go through the halfway back short. If I draw it up here, you're gonna see it. This is the point where it couldn't. Then it went back. It broke. Then it broke the long again. Pretty much untradeable for us at the moment. That's why we stay out of it. That's why we don't cover it. There's a lot of action in the currencies right now. This is the currency wars are on. I don't know if you guys saw in the morning. Abe, the Prime Minister of Japan, if I'm not mistaken, said that he relies on BOJ to be their fighter against deflation, which pretty much means they would like to print out the shit out of the yen, if I can say it like that. What is interesting to see in S&P? Let me just see if this thing loads. I hate the oh, okay, it loaded pretty fast. This is a daily graph of the S&P. For a fact, we know that there's an anchor at the 8063. I'm sorry for the price data. I don't have enough. An 8063 anchor. Let me just 863. Let me see if I can pinpoint it. This is what we've been holding in the S&P, as you can see. I know this is really awkward right now. I'm showing it on blank. I'm really sorry. If you pull up a chart on any proper broker, you would have this price data and you would be able to validate this thing. Let me see if I can. Okay, 86, not 5, 6, 3. This is what happened. Basically, this, if I'm not mistaken, this is Jackson Hole, Wyoming, when they announced QE2. I'm not sure. Basically, we held a 50%. What I wanted to show you guys is that right now we're trading to the target. We've traded to the target of the big long in S&P, which was given to us 4th of October 2011. Right now, what we could expect in the S&P and what we should expect actually is when we reach a target in our system, you would just drag your retracement to the target, to the top of your basically in your price action, and you will get a support level. For us right now, it's approximately, this is plus minus 10 points, because we're going to draw this on TOS and you're going to see it properly. The resistance level is 182, which to be honest it should be 170 something. Doesn't matter. This is what we have below us. If we don't keep up extensions, and it's going to be very hard. Basically, what the Fed has to do is continue QE. If the Fed does not continue QE, we have all this air below us, and the resistance point we have, the support point we have, is approximately the 1,180, which is far away down, far away down. This is a really bearish look upon the market. A lot of guys that trade this system have been talking about it, but to be honest, if QE doesn't end, I don't think that we're gonna get this. But eventually, the S&P will pull into a full halfway back, because that's what the S&P does. That's why this system is very reliable on the S&P. Don't get me wrong. It's just that right now the market is being manipulated totally from the Fed. And what happens with the S&P is that the S&P always pulls halfway back. This is a market feature that this instrument has. It's been like this for a long time, that's and also a lot of algos on this instrument. That's why you can rely on such price action. This is pretty much it for the S&P. I don't want to scare you guys, but this is how the daily graph looks like. We will get into that on the first weekend of our paid subscriptions. Our paid subscribers will have the opportunity of basically seeing the whole edge of our strategy and basically the implementation. Do you guys have any questions? This is not very clear. I'm really sorry that my broker has not doesn't have extensive price data, but have in mind I use an STP broker for forex, for currency markets. Basically, I get super low spreads. My spread on the USD is between 0 to 0.5 pips, basically below a pip on a normal trading day. That's why they slack around with the price data. That's what you get when you get low pips. Low spreads, you get shitty price feed. Anything you guys want me to have a look at? Anything you guys are interested in looking? Anything that is troubling you regarding the strategy? Brace for a flash crash. Let's hope not. I don't wanna live in such a world where S&P again goes down. because if we fail that single support point, it's not going to be a pretty. It's not going to be pretty. It's going to be pretty much the not the end of the U.S., but they're gonna be in serious trouble. Um, you guys have any questions, or should I talk about a bit about the site? Um, Pound getting offered again. Uh, this is getting old now. Uh, Gold does nothing else. Okay. Enough with the price action. Um, let's talk about a bit about the site. Let me see if I can bring up it up here. Okay, you guys pretty much are seeing our site right now. This is the main page. We click on login. Uh, we promise we're gonna fix the certificate problem. Matthew, I promise, bro, we're gonna fix it by the end of the week. Our tech guy is working on it. Right now, you have well, is it 7 days now? The free period ends in 7 days. Um, Please go online, have a look at what we're offering. As you can see, we're pretty decent traders. We know what we're doing. Um, right now, the password for the next 7 days, it will be test123 is the password. You log in. Let me just see what's going on Skype. Barnab. Okay, Barnab, I will, bro. Okay, so this is what happens when you log in. You got analysis, you got docs, you have portfolio. On analysis, when you click on analysis, you have pretty much all the things that we're trading. You got the Euro USD, you got the GBP USD, pretty much everything, all the majors. Oh, we gotta fix this exotic crosses. We don't have a section for the other pairs, which we cover, which are a lot. We will also start talking about commodities. We just want to finish up with the currencies, and also we want to start giving you some proper price data on the SPX or ES. We'll see what demand we have over there. Depends. We gotta spread the workload properly. Over here you see the latest updates that we have on the site. This is gonna get more frequent. We're just right now in a building position. That's why we have this soft opening on the site. I think for now that it's going pretty smooth. We had a bit of minor setbacks, but right now I think it's good. Yeah, pretty much you just click on anything you want. Then you go on hourly charts, daily charts, weekly charts. It's pretty easy. Just a sec, guys. George wants to tell me something. Yeah. Okay. The more interesting stuff. Okay, for those that I don't know if Plummet is online. This is the section where we post the morning and the evening briefings. These are the latest ones over here. So you can see Simeon made them pretty interactive, nice popping up and stuff. Last 4 days, morning and evening briefing. As you can see, we've removed the stupid economic calendar, which we were filling space with, and we're going to post the webinars. The last 4 webinars are going to be available to be looked at any time at your convenience. Also, I think Simeon is going to work on a link where you have the webinars from maybe the last month, last week. We'll see how that, what price, what time range you guys prefer. Then you have reports. On the report section, below you have the weekly recap. This is extensive analysis from George and myself. Also, you have special things. We update on a various time scale depending on if we see something, and we're going to tweet it for sure on our Twitter feed, the one that's going to be available for subscribers. Everything is going to be posted over there, but also most of the times we're going to have a report over here. We're going to so you can see basically the explanation. Also, you can have a look at how we got to the point, selling and or buying point. What's our rationale? We always take trades that have proper rationale. Okay, education section. Introduction to harmonic trading. That's what we uploaded yesterday. George was bugging me about that because it's my fault that it was delayed. This is basically a small introduction to Gartley patterns, which we have discovered in the past 4 months, and George has been working extensively with them, and I do not say he's an expert, but he's pretty acquainted with them. We have also the trading rules regarding what we use regarding our accounts, how we handle our money, how we handle our resources. We have an explanation about hedging and equity curve and drawdowns. This is going to be worked on in the future. There's going to be a lot of interesting stuff over here because we have, of course, every strategy has a drawdown. We are going to work on a way of basically finding where these drawdowns are going to occur, and maybe half size positions or so on. This is going to get worked on. Stats right now is not active because we don't have anything on there, because it's an extensive amount of work which has to be done. And once Simeon finishes with the site, he's our math geek over here in the office. He's gonna start running some correlations, etc. We want to do such things. We are interested in such things. Right now, we're outsourcing this info. What we have a plan to do in the future is also work on a algo that tracks Twitter, but that's pretty far away for now. That's okay. Yeah, the sign up is pretty straightforward. You click over here. Hopefully something comes out. This is what you get. I don't know if it looks good. Oh no, one thing I wanted to mention. When you click on portfolio, Simeon, why isn't this working? Active positions. It's bugging. Okay, I'm sorry guys. Simeon is gonna fix this right away. Over here we have where there's a really cool site. I don't know if you know it. Simeon can Trading View. We post from there the positions that we have. Simeon says that mine is not working properly. I don't know why. Okay, yeah, refresh. You click on full screen, and basically this is the trade of the euro yen. You click on play, and this is what happens. This is actually an old position. Okay, basically this over here, the things that are going to be posted is basically our positions, the ones that are the highlights of our trading. This is pretty much it. Let's talk about the sign up. The sign up is pretty easy. We mentioned that until 7th of February there's a $60 deal. You pay us $60 and you get us for 3 months. This is basically you get March, April, and May for $30. Basically, the deal is you get May for $30. You can sign up For after the 7th of February, you can sign up for $30 for any of the single months, March and April. And from May, the single month subscription becomes $50, and then for a 3-month pack, you get a 40% discount, and total price of $90 for 3 months. Basically, this comes out $30 a month. Pretty straightforward. Click on subscribe. This dodgy page comes out. It says 3-month pack 60. This is going to be, I told you guys, until the 7th of February, and 1 month pack $30. This is going to be changed after the 7th of February. There are going to be different buttons over here, but this is how you sign up for us. Things are working out pretty well with the site. I think we've been posting some decent positions. Do you guys have any questions? Because I'll be leaving you. We gotta get on with our office work. We got a scary load of it. Euro yen really going well, I think. We'll see if we get those 122 targets. I sure hope so. Come on, guys. Any questions? Let me just blow out the screen. Nothing? Okay, guys. This was pretty much from us. If you have any questions, please feel free to contact us via Twitter. Doesn't matter who, George, Alexander, which is me, and Simeon. Our Twitter handles are on the site. Our email is, we have multiple emails. I personally post mine in the morning briefing. You can check it out. If you have any questions, please feel free to contact us. We will answer anything that is that we can, of course, answer it properly. And this is pretty much it for us today. Okay, guys, take care. Bye.